Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day. It's also Fed Day. We got the big day for the Fed announcement today, and today is December 19th. We got, first, let's look at the economic calendar. We got existing home sales being reported today for the month of November. So in October, we had 5.22 million existing home sales on annualized units. Forecast is supposed to show it dropping down to 5.17, but however, it did go up to 5.32 million. So instead of going downwards, it went upwards in November. So obviously, pretty good, nice surprise there, since we've been seeing a slowdown in housing. But this one, November surprises and snuck up a little higher. So good news there. As we had said, there's an FOMC announcement later today by 11 o'clock Pacific Standard Time. The Fed will give their announcement. It's widely expected that they are going to raise the rates a 0.25%. It's about 70-ish, maybe 66, depending on what analysts you're looking at as to the percent of them raising the rates. But I think there's been a lot of pressure on the Fed to maintain the status quo, but I think they're going to go ahead and do it today and then look at, personally, I think 2019, they're going to simply state in their announcement that they'll do a wait-and-see approach in 2019. That might kind of help ease the markets going into 2019 as to where it is. But on that same note, I think you're going to also see the do a wait and see. So sometimes the good news that we see in the economy might be bad news because that might be a signal ahead for the Fed to continue with the rate hike, and that could spook markets going forward. So just be cautious in 2019. Good news could be bad news in that sentiment. So. But today, so far, the stock market is up, rising ahead. The kind of pricing, I think they've kind of been pricing that there will be a Fed rate hike today, about quarter. This will put us at a negative yield curve, unfortunately. But again, it could be a minor. We'll have to kind of wait and see how this all unfolds here. So let's kind of push ahead, see how this is affecting the bond market. Bond market is doing quite well. We broke above the 200-day moving average, which has been a pretty strong ceiling. Now it should be a pretty strong floor of support here. We'll at least get another day or two of this to verify that this stays strong. Obviously, it needs to be tested, but this could be a nice support here for the mortgage-backed securities, and I think you're going to see rates showing some improvement today in your pricing today as well. Yields, on the other hand, of course, have been kind of coming down. It's testing that it broke just below this 2.85 Fibonacci level, which was a floor of support, which, as you can see here, tested a couple times and withheld, and just finally broke through yesterday. Today, it's testing the next layer down here at about the 2.81 level, and if it breaks below this, the next level is down to about 2.76 level as well. So that could, again, would help push mortgage-backed securities higher. In turn, will help help out interest rates. So let's see if this trend continues or not. All right. So stay tuned for 11 o'clock. I will be posting on Twitter any comments and the sentiment on my Twitter account at Mike Bjork. If you guys want to get any updates on that. However, you guys enjoy the rest of your day, and thanks so much for watching. We'll see you guys later today on Twitter. Otherwise, we'll see you tomorrow on the videos for tomorrow. Have a great day. Bye-bye.